Hey everyone, hope you're well. Welcome back to another edition, #AskRobCo with James Wild, every Wednesday at 1 p.m. here to give you the latest data into what's happening in the property market, what's happening in real estate, bank, finance, lending, sanction credit risk, sales, and everything else. Been a super busy week this week. We have just launched the Property Valuation podcast. Please support it, download it, listen to it every weekend. It goes into even further detail and analysis on everything we're talking about on our Wednesday shows. So I will be sharing with you the link to that, and please support it further. The Property Valuation podcast, more information, more detail, and even deeper insight to the beautiful world that we live and work in. How you doing, James?
Yeah, really good. Thanks, Rob. Really good. How are you?
Good. Let's go straight into it. Let's go straight into this week's numbers, and then let's start sharing with everyone what we are seeing on the ground as things start to get very busy from our side. Busy week, and I can tell you that inspection times are drifting, and that says that there's more supply coming on stream, that there's more deals taking place, and all the agents I'm speaking to are telling me that the numbers are drifting slightly, and bookings are now, for most firms, possibly it's around 3 weeks, 21 days, and some are 14 days, but things are really drifting out. Obviously not with us. We've got great availability as always, but I think it's always key to see the trend on availability and inspections. That tells you how much volume there is going on in the market. All right, so let's look at the numbers. Week 18. We've got 370 new instructions, and again, a bit of an increase, but really steady, not going anywhere, ticking over. Not the worst numbers, but again, nowhere near the historic numbers. Super steady, and it is just continuing. In relation to the sold numbers, slight upturn on the last few weeks. We're now at 148. Again, nowhere near the 200 plus what we were seeing week on week previously. I still do expect this number to increase, but let's see what happens with that. Stock, a major problem. And now we've got the monthly figures for the prime, super prime numbers for April, and that's the 2, 3, 5, 10 million figures, and they were just slightly down on April. March was slightly down on March. I think we can see that the numbers, broadly similar, just slightly down. I think up to 2 million, the volume just wasn't there, but everything 3, 5, 10 million plus, broadly the same, and that's, again, we'll keep an eye on that. So that's performing really well, and I think you've got some further data on that, James, on the prime central London space.
Yes, thank you, Rob. So as you can sort of see from tallying up our graph there and tables, there's been around 140 sales so far this year in the 5 million plus bracket of the market, so prime central London. And in terms of the combined value of these transactions, this equates to about £1.42 billion, which broadly against the transaction volumes equates to an average of about £10 million per transaction. A very positive start to the sort of halfway through Q2 of 2021. The prime central London market space seems to be building on a very positive 2020, where we saw record numbers and volumes of transactions there. So we're going to continue to monitor that through the second half, through the remainder of Q2 2021 and the second half of the year.
Brilliant. And just to wrap up those trends, the new instruction levels are just nowhere near what they were. Everyone that's got the graph, and where you can see in front of you the blue line that shows us the last 12 months of instructions, we're just about 50% down on where it was. And for the market to be fueled and for there to be more sales transactions, that there just needs to be more stock coming on stream. It is as simple as that, because everything after that then works its way through. Your under offers and your solds function off the back of those instructions, and we're about 50% down really on where we were performing last year, and it will be interesting to see if that recovers. And although the sales numbers aren't 50% down, they were very consistently between 200 and 300 in a large part of 2020, and we're just not seeing that currently.
Well, one thing also, Rob, I think that one issue which might be deterring some possible sellers from bringing their property on the market is the shortage of stock. Is therefore, will they be able to acquire another property if they are looking to stay in London? That competitive nature is maybe deterring some people from bringing their properties to the market from the chains and the knock-on effects of that.
I think that's a really good point. One of the things I'm seeing at the moment is that there are a lot of properties that are off-market, semi-marketed, and those owners are looking for a forward purchase. And what they're doing is they're saying, okay, let's find out if there's interest from the property. So let's get a buyer or get some offers. And then we go and look. And then the thing is, they can't find something, or to find something takes 3 to 6 months. So the whole process and the whole deal flow and the whole chain becomes protracted. And that's something that I'm seeing that's really common. And I think that's what we're going to see for the remainder of this year. We're going to see a lot of deals off market, but then even if there is interest to buy, the sellers require a forward purchase, and it's very difficult for them to find something due to the lack of stock.
Yeah, and just in terms of those sales numbers, again, we're thinking that the end of May and certainly the months of June are going to be particularly busy with those stamp duty incentives coming to a close. For the first £500,000 coming to a close at the end of June. So we're anticipating those being busy months with higher transactions.
Yeah, agreed. What else have you got, James?
Well, today I just wanted to talk about some of these issues of the housing shortage, which obviously we've been seeing, and the lack of new instructions in terms of the delivery of new homes, which seems to be almost moulding the market and obviously restricting some of the buyers. We're seeing multiple buyers for each property which is on the market in some instances, which again, like we said, Rob, is leading to some sales going over and above the guide prices, the asking prices of residential property. So I just wanted to direct everyone, firstly, to just a historic and projected graph of the population here in London and how we're expecting that to grow over the next 20 years or so, from 2021 to 2040. This obviously will have a knock-on effect throughout the city in terms of where all these people going to live. Are they going to be commuting in? Are they going to be based in the city? And how is that going to impact the built environment in London? Go on, Rob.
Yeah, just to start on that one, is that a lot of these trends and predictions were built out before COVID and the pandemic. And are we thinking anything changes here, or what we're thinking when things get back to normal, London's growth and Greater London's growth as a population continues, or are we going to see a redistribution throughout the country of the population to Manchester, Birmingham, northern powerhouses and so on? So So what happens to these projections now?
It is very true, Robert. Some of these projections could be softened slightly. There has been some social migration out of London. However, in terms of jobs and the activity within the city, I do feel that sort of net migration will be eased, and we won't see, drastic falls in terms of those which reside in London.
Great.
I think this sort of brings us on to our next graphic 3 on your handouts. This is a national graph, and it just shows some of the completions and also the project starts of new housing schemes across the UK. And as we can see, in 2020, these really did fall quite dramatically in terms of both the completions and the new starts. I don't have data of London specifically, but as a holistic view, this really does cover what is going on in the market. We've seen house builders across the UK, a lot of their profits have halved in terms of 2020, just because I think they're obviously building less stock, completing on less stock, so they're not able to sell as many houses. And it's just what we're going to see in the coming year or two, how this could upset the equilibrium of the market, because as a result of 2020, there's obviously going to be less new build housing supply, we believe.
I think that's really interesting, that chart, in the sense that the new build starts seem to have fallen off a cliff during COVID, even though construction was allowed to continue. Are we thinking that there's going to be a strong rebound and an upturn in that starts for new builds moving forward over the next 6 to 12 months?
Well, we hope so. I mean, there was a couple of months lost to COVID, and there were also, across much of 2020, there was reduced capacities on site, so less sort of the skilled workers, the labourers. So I think construction was definitely slowed from what its usual rates are. But I think this will have knock-on effects, like we say, and there will be a lower delivery of housing. There could be an uptick. I think that brings us nicely onto our next graphic, graphic 4. And these are some of the completions in terms of housing. This is specific to London, and what we've seen in the last 10 years in terms of the delivery of houses. Houses and flats, new build units. If we tally these up in the last 10 years, we've only built in London around 300,000 new dwellings, which is far, far below the target set by both central governments and also here in London at City Hall. Their projections, so there's recently been quite a swathe of sort of marketing material out there from them. They believe that London requires 66,000 new build homes to be built every year for the next 20 years. And this is to make up for the current shortfall in housing in London, but also factoring in some of those previous predictions on the social migration, and also, like we said on the first graphic, the population growth in London. So that's 66,000 per year they're predicting is required, and that doesn't tally with the delivery of housing which we've seen in the last 10 years, which is shown here by our graphic number 4.
I think London, being one of the most densely populated major cities in the world, has always allowed for that property demand and supply equilibrium to function, which has again in turn always put pressure on pricing, which has allowed substantial price growth and capital growth over the years. So a cynical viewpoint could be, why disrupt that equilibrium of demand and supply, which allows price growth and capital growth, and maybe the 35 to 40,000 mark per year allows pricing to be sustainable without having any sharp declines?
Yeah, and also, Rob, I think, like we've said, I think the market has adapted to this slightly more constrained supply of housing. We have seen that the average number of occupants per household increasing over the last 20 years or so. We've actually got a graphic just showing this at graphic 5, the estimated number of property per dwelling. Having been, gradually increasing since about 1995. We've brought you news of this in the last year or two. The HMO market has been particularly strong here in London, and demand for that. We've seen new landlords entering the market. We've seen the emergence of build to rent, and also the government's had to react to that in terms of more regulation with the HMO market. But we've seen a raft of activity in that market in the last 2 years.
Yeah, I think that graph is massively interesting, James, and it's a key point to buy-to-let investments and HMOs and so on. Why? Because in the 90s, we reached a point where the dwelling per home was virtually, I suppose the graph says 2.3, and I think what the crash in 08, 09 brought around was that people's need to save money and have less outgoings because their income streams were reduced. And so what we see very clearly is a consistent increase in people moving back to their family homes or moving into shared accommodation with more people to reduce their outgoings and costs. And I really think that the 2010 to 2020 decade has clearly demonstrated that lack of earnings growth following government policy of post-Lehman's has seen a complete change in people's behaviour, and this graph really demonstrates that.
Yeah, I agree, Rob. And also in the last few years, we've seen sort of a much higher cost of living here in London, and also with housing costs going up, but seemingly more recently, rental prices softening slightly. So it's a very delicately balanced equilibrium, and how those factors fall into place in terms of that figure increasing possibly over the coming years, the number of occupants per dwelling. I think it's almost a measure of where the market's at, and in terms of availability of stock, and also a lifestyle change possibly.
Yeah, I mean, next week we're going to run a buy-to-let special, and we're going to go into more detail on this. And one of the key points is we've already discussed how there's been rental declines in terms of rental income, and especially in inner city London. We'll go into more detail next week, but also product has changed. So there's been growth in rental demand in houses and larger footprints with outdoor space. And so the buy-to-let market has moved, and having more people in a property has also changed. And I think that whole dynamic is an interesting one to which we'll investigate even further next week when we do our buy-to-let special.
Yeah, and also, Rob, just in terms of these sort of data we brought you in terms of the housing shortage and how that is shaping the market, there has been recent initiatives brought forward, such as we touched upon last week, I believe, such as new homes in the City of London, around 1,500 new homes, and our high streets delivering possibly a figure of around 25,000 new homes. So I think the market is trying to correct itself and obviously boost its housing supply, which I think is needed, not just here in London, but across the UK on a nationwide level.
Brilliant. What else we got this week, James? Anything else?
Well, those are the main things I wanted to feature on this week in terms of some of the rationale behind some of these housing shortages we've seen, and how the next 12 to 24 months is going to be moulded by these possible shortages in the new build supply, and sort of that is the new pipeline of property in London. Otherwise, it's either houses being split into more flats. We're not getting that added pipeline of supply, which ultimately those shortages drive price increases. So it almost forms a little table here of how we think the market is going to be shaping up. Is there going to be a short-term stock shortage in the next 12 to 24 months, which could see prices climb more sharply than we've seen recently, followed by a flatter period of growth? Obviously, we're going to be monitoring this very closely over the next 12 months or so. But we just wanted to bring you some of this data, which obviously we feel shapes the market and how it performs and reacts.
Brilliant. Really appreciate that, James. Great update this week. Great analysis. As I mentioned previously, property valuation podcast, please don't download it. Please follow it. Next week, we've got a buy to let investment special. We're going to go really deep into what's going on in that market, inside of London, outside of London, Greater London, home counties. We're really going to dig deep into that. There's so many interesting scenarios and facets to that market, and we really want to add some value and give you some good data, intel, and content of what we're seeing on the ground and how things are moving. So thank you everyone for joining this week. Thank you for supporting across all the platforms. Please download the Valuation Podcast, and we will see you same time, same place next week. #AskRobco, 1 p.m. every Wednesday. Have a great week, everyone. Thanks, James, and speak soon.
Thanks, everyone.